Hello everyone, happy Melbourne Cup Day and good afternoon. Sage here, live from Kalkine studio. And you're watching the Early Trades, a show where we share with you a glimpse of the Australian share market's opening trade scenario, and along with the global and domestic drivers triggering the market's momentum. So let's get started. Australian shares opened up 0.3% this morning, with every sector higher except financials and materials. The energy sector is up 0.8%, with the yield-sensitive real estate sector up 1.65%. And Praemium shares are 17.7% higher to a $1.47 price after it received a takeover bid from Netwealth, valuing it at $1.50 per share. On the S&P ASX 200, the top performer is Goodman Group, up 5.6% after a profit upgrade. And Westpac is down 0.7% after tumbling 7.4% yesterday. Insurer IAG is down 4% after blaming excess storm damage for a downgrade to its margin guidance. A cautious start coming up ahead of a potentially market-moving RBA meeting today. Anyone not fixated on the Melbourne Cup will scan the Reserve Bank's policy update at 2:30 p.m. Australian Eastern Daylight Savings Time for signs of a shift in the bank's rates outlook. The bank is expected to amend its policy to reflect strong moves in real rates as directed by bond yields. And the 10-year Australian yield smashed through 2% last week for the first time in 2.5 years. And notably, the RBA failed to defend its yield target for the 3-year bond. Any change this afternoon will have implications for investors and homeowners. Record low rates have helped lift stocks and house prices to all-time highs. IPO'S for today, another double header today. Sense Technologies at noon, Australian Eastern Daylight Savings Time, is a drone tech company, and Aurum Resources at 1:30 p.m. is a subsidiary of Eldoro Resources, which will contain 3 of Eldoro's WA gold projects. Let's look at the top newsmakers for the day from the morning's trade. And Netwealth has proposed a $785 million merger with Praemium to create the largest independent wealth management platform in Australia. Netwealth confirmed on Tuesday it had lobbed the offer at Praemium last week. And under the terms of the proposed transaction, Praemium shareholders would receive 1 Netwealth share for every 11.96 Praemium shares, plus a cash consideration from the net proceeds from the sale process of Praemium's international operations. The offer is at a 29% premium to Praemium's closing price on Wednesday last week. And commercial property landlord Goodman Group says strong demand and partner performance mean it now expects operating earnings per share growth of more than 15% in financial year 2022. Chief Executive Greg Goodman said high utilisation of space, barriers to entry and limited supply in the markets are underpinning occupancy and cash flow growth in their portfolio, with strong rental growth occurring globally. Development work in progress has grown to $12.7 billion, with the production rate expected to average approximately $6.8 billion for the year. We remain focused on regeneration of existing land and buildings in their portfolio, supporting future development work and reducing their impact on the environment. And Goodman Group shares are up 19.5% over the past year and last closed at $22.25 on the market value of $41.4 billion. And IAG has downgraded its insurance margin guidance from between 13.5% and 15.5% to between 10% and 12%. The insurer blamed excess storms and unusual weather for a $280 million increase in its net natural perils allowance, which equated to around 360 basis points at the reported insurance margin level. And shares are down 3.1% to $4.69 this morning. Australia's healthcare regulator, the Therapeutic Goods Administration, has approved Telix's prostate cancer imaging product named Illuccix. And Telix shares are up 785% over the past 5 years and last closed at $6.64 on the market value of around $1.9 billion. The company is still awaiting final regulatory approval for its Illuccix product from the US healthcare regulator, the FDA, and has product approval applications awaiting in Canada and Europe. Broker Morgan Stanley has downgraded Westpac shares to an equal weight rating after the bank disappointed investors on Monday with its net interest margin erosion. Morgan Stanley cuts its valuation of the shares from $28.90 down to $24.80. Morningstar sees the shares as undervalued and says it rates the stock's fair value as $29. For financial year 2022, Morningstar forecasts Westpac to pay $1.20 per share in dividends, with total distributions tipped to rise to $1.25 per share in financial year 2023. And thanks for joining us on another edition of the Early Morning Trade. Stay tuned to Kalkine TV as we may have many more shows lined up for you, sharing live market updates across the economy, markets and sectors. And best of luck if you are betting on the horses today. This is Sage signing off.